Perfect. Assalamu alaikum and good morning, everyone. Thank you for joining us today for this very crucial and timely discussion with Governor Jameel Ahmad on charting a course for economic resilience, the role of the state bank. My name is Areeb Shahid, and I'm honored to serve as the president of the Pakistani Students Association Coalition. At the PSA Coalition, we are dedicated to fostering dialogue and engagement among Pakistani students and Pakistani student associations across the US on critical national and international issues. Our mission extends beyond merely uniting Pakistani students and PSAs and celebrating our rich culture. We are committed to establishing a platform that catalyzes pivotal discussions and strengthens our collective voice, empowering us students to actively shape Pakistan's future. Today's topic, the state of Pakistan's economy, as you all may know, is of immense importance. And we are very honored to have with us Governor Jameel Ahmad of the State Bank of Pakistan, who brings a wealth of experience in economic policy and banking regulation. His distinguished career in central banking spans over 31 years, with various senior roles at both the State Bank of Pakistan and the Saudi Central Bank. His deep understanding of Pakistan's financial infrastructure and strategic vision have been crucial in formulating policies that stabilize the and economic stability and promote sustainable growth. Under Governor Ahmed's leadership, the State Bank of Pakistan is navigating challenging economic times with policies focused on enhancing economic resilience and stability. Governed by a governor, which is appointed by the President of Pakistan for a renewable 5 year term, the State Bank of Pakistan's mandate is very extensive, ranging from regulating the money supply to ensuring financial stability, roles that are crucial in both global and domestic economic contexts. Recently, the PSA coalition had the pleasure of hosting Dr. Ishrat Suzanne, who is also a very notable former governor of the State Bank of Pakistan, who provided his insights into the ongoing challenges for economic stability in Pakistan. Today, we look forward to Governor Jameel Ahmad's sharing his perspectives on the innovative policies and strategic international engagements that are shaping the future of Pakistan's economy. Governor Ahmad, thank you so very much for joining us today. We are very eager to learn from your experiences and insights. And without wasting further time, I would now like to hand over the floor to you for your opening remarks. Thank you.
Thank you very much, Arif, and good morning to all of you. It's a pleasure to be here and talk to young fellow students and from Pakistan. Obviously, you have been in your respective universities have been doing good work trying to learn, and I'm sure some of you will come back and maybe will also be joining the central bank, and we would be benefiting from your learnings which you have achieved over a period of time. So coming to the topic, what I will do is that I will for a few minutes will provide you an overview of the recent economic developments and the challenges which we have been facing and the steps which we have been taken to address those challenges, and then the current situation. And then we will be discussing and responding to the questions which you may have. So starting with the overview, as you know, we have been going through a very challenging times, particularly for the last couple of years, and it started sometime towards late 2021 when we have heating up of the economy, and as a result of that, the SBP started taking some measures. As you know, I'm sure you would have been going through the news emanating from Pakistan and have seen the recent as well as the economic developments at that time. So Pakistan actually at that time faced two crucial challenges, I will say. One was the high current account deficit, and as a result of that, its pressure on the foreign exchange reserves, and also the related issue was increasing inflation at that time, very high inflation starting towards the end of 2021 and peaking in early 2023. So in order to address these challenges, SBP then take a number of measures. If you look at the data, first we will talk about the external side. So look at the data and you will find that for the fiscal year 2022, Pakistan has a very high current account deficit, and that reached to about $17.5 billion for the fiscal year 2022, which was quite high, and this put a lot of pressure on our external account. And in GDP terms, it was close to 4.7% of the GDP, which for a country like Pakistan obviously was not sustainable. And second related issue, which was due to due to various factors, including the Ukraine war, and as a result of that, the high commodity prices in the international market, and as a result of that, its impact on inflation. So inflation also started increasing towards late 2021 and gradually continued to rise. Then, as you know, during the mid of 2022, we have floods in Pakistan, and this disrupted the agriculture supplies. And also we had the pressure on exchange rate as a result of increased current account deficit. So there were two issues in that. One was that the domestic supplies were not sufficient to meet the food requirements, and secondly, country has to import a lot of food supplies, and since the prices in the global markets were high, and also the exchange rate was at that time also depreciated. So higher prices in the international market, and also importing at a relatively higher rupee value of those. So both these factors translated into higher inflation in the country. And as you know, at that time, the oil prices were also increasing, and Pakistan is a oil importing country. Almost 1/3 of our imports are in the form of petroleum related products. So this also then put pressure on our prices in the country, and as a result of the inflation was quite high. So in addition, there were some other issues, but I think these two are the core issues at that time which we faced. And in order to address these issues, both the government of Pakistan and the central bank took a number of measures to bring the prices down, as well as to control the high current account deficit. From the central bank perspective, we started with some administrative measures, whereby the imports initially were, there were certain restrictions on imports, and the State Bank at that time required the importers to when they approach to bank, and then through the banks, the banks will come to central bank, and we ask the banks that any import will require prior clearance from the State Bank. So as a result of that, something like 10,000 plus import requests were received at that time to the State Bank, and we have to look at every import transaction and then allow the banks to import, or sometimes not allow them to import. So this put a lot of administrative burden on the SBP also, and since the liquidity, foreign exchange liquidity at that time was not very good, so the banks will have to seek prior clearance from State Bank. So this process continued for almost six months till the end of 2022, December 2022. In January 2022, then we started, instead of case-by-case approvals, then we asked the banks that there are certain imports which are in the priority list, so you have to focus first on those imports, and then once you have additional liquidity available, then you will go for the alternate imports. So we gave them a guidance, and that was that you have to focus on petroleum imports, you have to focus on food-related items, you have to focus on medicines and other pharmaceutical imports. and you have to meet the requirements of the exporters. So we wanted exporters to be facilitated because they are a key source of foreign exchange earnings for us. So after that, if you have additional liquidity available, then you can focus on other imports. So this was a kind of broad guidance given to them. And this again continued for almost 6 months till the mid of 2023. So that way, we have tried to curtail imports through the administrative interventions. At the same time, we also issued certain regulatory requirements for the banks also, whereby we have adjusted some cash margin requirements and similarly some other regulatory measures so that the volume of as well as the value of the imports can be controlled to bring it down to a more reasonable level which we can afford. As a result of these measures, you can see the import imports of Pakistan came down. And also we took certain measures to increase exports as well as to increase remittances. So the net result was that our current account deficit for the fiscal year 2023 decreased to less than 1% as against 4.7% of GDP in the previous year of 2022. In value terms, from $17.5 billion in 2022, the current account deficit came down to $3.3 billion. So this was a significant reduction from 17.5 billion to 3.3 billion within a short span of 1 year. And this helped the country to some extent to stabilize the external account of Pakistan. Now, the second issue, which was related to inflation, as I said, inflation started increasing towards end of 2021, and at that time, State Bank started taking the monetary policy measures, and whereby we started tightening of the policy rate. So that we, using this tool, we can control inflation, along with various other measures which were being taken by the government and the State Bank at that time. So we through the successive policy tightening measures, we increased the policy rate by cumulatively by 1,500 basis points from less than 7% to 22%. So in starting from September 2021 till June 2023. So within less than 2 years, we increased the policy rate from 7% to 22%. Now, this huge tightening also played a role in bringing the current account deficit down, along with other measures which were taken. So we were one of the first central bank which started tightening of policy rate in late 2021. Now you can see with such a high rate of interest, the businesses started revisiting their expansion plans, and they also adjusted their business models so that they can they can withstand this additional burden of increased financial costs. As a result of this, as you know, there is also a time lag between taking monetary policy and other policy measures and actually the results translating into the improvement in the economic indicators. So the inflation continued to rise for some time, and then it started decreasing. It peaked at 38% in May 2023. And then it started declining from June onwards. So you can see 38% inflation for a country like Pakistan. It's very high. It is very high for any country. But since we have this historic high inflation, so there was a lot of public reaction also. So so we, along with the government, took various measures to bring it down. And you can see gradually the inflation has continued to decline. And currently, it was actually just today, it has been announced for the month of April. And April inflation has come down to 17.3%. April 2024, last month, from the highest level of 38% in May 2023. So similarly, the core inflation also, which was above 20%, and it consistently stayed at above 20% for quite some time. So it has also started coming down. Last month it was above 15%. So it's currently close to 15%, which is still very high. And CPI is at 17% is still quite high, but it is much better than what we have last year. So you can see the regulatory measures as well as the policy measures which have been taken over a period of time has started yielding results, and it has started bringing the inflation down. And at the same time, it has also helped in controlling current account deficit. Also, from the government side, you can see the government has also have been following a very tight and disciplined fiscal policy also, which is seen in a very controlled expenditure. And also the government has focused on increasing the revenue, both tax as well as non-tax revenues. And this has helped the government to bring the primary to convert the primary deficit into surplus. Currently, for the current fiscal year, the government has achieved a primary surplus other than debts servicing. So primary surplus is 1.8% as compared to the target of 0.4%, which has been agreed with the government, with the IMF for the full fiscal year. So a close coordination between the monetary policy from the central bank as well as the fiscal policy from the government and a very tight discipline on expenditure by the government has resulted into improved fiscal position as well as decrease in current account deficit, as also decrease in inflation. So the current economic indicators are much better as compared to where we were a couple of years back. We are not yet out of the difficult situation. There are still many challenges, but I think this situation is much better than where we were a couple of years back. Now, also, as you know, last year we have entered into a standby arrangement with the IMF, and under that we have received $3 billion, and there were certain structural benchmarks and quantitative targets which we have to achieve under the arrangement with the fund. So that has also helped us in improving our external position and also increasing our foreign exchange reserves. So State Bank's foreign exchange reserves, if you are following it, last year it decreased to less than $3 billion, which is less than a month import, close to 3 weeks imports, and which was a very vulnerable situation. So over a period of time, we have gradually built up our reserves, and currently our reserves stand at more than $9 billion. So which again is a much better level as compared to where we were last year. And we are hoping that we'll continue to build FX reserves of Pakistan further. And next year, inshallah, it will be in a much better position. So in conclusion, I will say that I wanted to convey 3 messages. One, that current account deficit, which was at a very high level a couple of years back, has started coming down and is well under control. And currently, in value terms, for the current fiscal year so far, for the first 9 months, it is just $500 million as compared to $3.3 billion for the full year last year and $17.5 billion a year back. So $500 million, well below 1%. is a very good controlled current account deficit. For the full fiscal year, our target from the central bank was that we will contain the current account deficit between 0.5% to 1.5%, and we are hoping that we will end up towards the lower band of this projection. For this year, our from central bank, our projection is that average inflation for the full fiscal year will be between 23 to 25%, and we are hoping that we will end up well below 25% for the full fiscal year, as compared to above 29% last year. On end period basis and June inflation also, we are expecting that it will be significantly down. Already it is down, as I said, from 38% last year to 17.3% for last month. And we are hoping that it will come further down during the next two months. The third and last message is that we have successfully implemented the IMF program. And as a result of that, we have taken a number of regulatory and policy measures, which has helped in stabilizing the economy. And as a result of that, the key macroeconomic indicators have significantly improved, particularly during the last year or so. And we are hoping that this process will continue. And for the next fiscal year, we will have much improved economic indicators. One key area of concern is that we have last year we have a contraction in economy. Our GDP contracted by 0.2% last year. And this year, although there is some improvement, but still the economic growth is relatively low. And it stood at, for the first 6 months, from July to December 2023, it stood at 1.7%, which is better than last year, because last year was contraction. But it is still on relatively on low side. For the full fiscal year, we are hoping, and this is the projection which the State Bank has given, that our growth will be anywhere between 2 to 3%, which will be better than last year. But obviously, we have to focus on growth also once there is more stability in the economy. So that is an area obviously where more work need to be done. So maybe I can stop here, and if you have any questions, obviously you have many questions, so we will discuss, and I will try to answer those questions.
Why, thank you, Governor, and welcome again. We're going to move on to our moderated session now. So yes, we do have questions for you. It's great to have you here. Your breakdown sets us up nicely for our questions, especially your points on monetary policy in Pakistan, as we've seen in the past few months. My name is Azaz Salahuddin. I'm a student at Dartmouth College in New Hampshire, studying economics and Middle Eastern studies. I'm originally from Lahore, and I can't wait to hear what you have to offer today. I have the pleasure of being joined by my co-moderator, Nabia Ahmed. Nabia is a senior at Minerva University, studying economics and managing operational complexity. I'm sure she's as excited as I am to go on further, as are our audience members. So without further delay, I'd like to hand it over to her to ask our first question.
Thank you, Azaz. Governor, it's truly a privilege to have you with us at such a critical time for Pakistan's economy, like you rightly pointed out. We recognize how busy your schedule must be, and we deeply appreciate you taking up time to be here with us today. I appreciate the deep insights that we got from your breakdown earlier on. And to start our conversation, since we have individuals from varying levels of understanding the economy, the State Bank of Pakistan, all the way from O-level students through to university and postgrad students here. We'd like to start our conversation for the moderated bit by requesting you to help us understand something that might be a bit confusing to our audience. Could you please explain the role of the State Bank of Pakistan, particularly in how it stands apart from the functions of the Ministry of Finance? Because these roles often seem to overlap, but they contribute in distinct ways to the economic governance of the country, and so a distinction would be greatly appreciated.
Thank you. So the role of State Bank of Pakistan is defined, well defined in legal terms under the State Bank of Pakistan Act 1956, which has been amended from time to time, and last amendment was made in early 2022. Under the amended act, there are three key objectives set for the State Bank of Pakistan to achieve. First of all, and the most crucial, and which is the primary goal of the State Bank, is the price stability. So we are expected under the law to take necessary measures to ensure price stability. And this is the key objective of the State Bank. Then, subject to achievement of this key objective, the second objective defined under the law is financial stability. So financial stability, as you know, means overall financial stability within the financial system, and also stability of the individual institutions which we regulate. So, so financial stability is the second key objective, but it is subject to achievement of the first objective, which means that we will first have to focus on price stability, and after achieving price stability, then we have to have to take measures to ensure financial stability. Then third objective is supporting economic growth, supporting government policies to achieve sustainable economic growth. This is a third objective, but this is again subject to achievement of the first two objectives. So hierarchy of our objectives is that first of all, we will focus on price stability, then next financial stability, and then supporting government in achieving sustainable economic growth. So these are the key areas as per SBP charter on which we are expected to focus on. And these objectives are like any other central bank. In most of the cases, central bank's key and primary objective is to ensure price stability, then financial stability, and then any other objective. And the other objectives vary from country to country, but invariably price stability is the key objective of any central bank. For the government, obviously, fiscal policy is their primary mandate, and within that, they have to ensure meeting the debt obligations and taking measures to increase revenues and to control expenditures, and to come out with fiscal policies which provide for welfare of the public. So, so it's a very distinguished mandate for the two. Government main focus on fiscal side, State Bank's main focus on monetary policy and price stability. Yes.
Thank you, Governor. Now, with that definition in place, I would begin by first asking you to please explain how the State Bank as an organization has evolved over the years, perhaps with changing times and situations. And second, how a person is chosen for your spot as the governor of the State Bank.
So evolution, I think, since I have seen firsthand over a period of time. I joined SBP in 1991. And when I look back and see the central bank at that time and see the central bank now, so I can see a great evolution taking place over a period of time. At that time, first of all, we were very manual focused approach. Everything was being done manually, as was the case with the public sector organizations at that time. And we had very typical central banking functions at that time. We are not a very modern central bank. So over a period of time, we focused on automation of our operations, and we added new functions, and also we defined and redefined our core objectives over a period of time. And ultimately, we, like any other central bank, started focusing on price stability. And in the process, obviously, as I said, we added many functions. Particularly, we assumed roles which were at that time were not there. For instance, I can say at that time the core focus was, in addition to price stability, at that time the focus was on supervision and regulation of banks. And then over a period of time, we assumed a role in the areas of financial inclusion, for instance, digitalization of the economy, promoting development finance. So these areas were not that there at that time. At that time, the focus, as I said, price stability, monetary policy, financial stability, including the regulation and supervision of banks, currency issuance, advisor to the government. So these were typical functions. But financial inclusion, digitalization of the economy, so these are new functions which we have assumed. And in current period, I will say there is an increasing focus on digitalization and also the payment system side. So we have implemented a number of projects to bring efficiency, cost reduction, trust of public in our payment system, so that they can transfer funds from one place to another place in a secure and cost-effective manner. And similarly, we have a number of initiatives currently in place whereby we are trying to bring more and more people to the formal banking channels, and we are trying to increase access of public to the formal financial services. And for that, we have taken a number of initiatives. So all these are, I will say, modern day banking functions, but not all countries are performing. Some of them are focusing in these areas, and others, they are still focusing on the typical central bank functions. But we have, as a central bank, have played a key role in promoting development finance, creating enabling environment for the banks whereby they can extend financial services to priority areas, including SMEs, agriculture, housing finance. So in recent years, we have taken a number of steps to improve our outreach and also to serve these priority segments of the society. Also, we have taken a number of steps to strengthen our payment systems, and also not just the payment system infrastructure, but also we have taken steps whereby we can strengthen the oversight of the central banks on these payment systems. We have recently completed the RAS project, which is our micro payment gateway. And this is one of the best, considered to be one of the best micro payment systems which have been installed by in recent years by any central bank. And already we have a large value payment system which is called RAS, which is called RTGS. So that system is already working, and with the addition of these micro payment gateways, now you can see more and more people are now using the banking services and payment solutions for making payments, for transferring their funds, and also this has resulted into the increased number of people using digitalized modes of payments. And also on the financial, the consumer protection side, we have taken a number of steps whereby we can protect the consumers also from, I mean, while when they are using the banking channels, their interests and their rights can also be protected. So for that also we have taken a number of steps. So these are the, I will say, modern day focus of the central bank: consumer protection, financial inclusion, digitalization. So these are the areas, I think, which have become crucial in addition to the primary objective of price stability and financial stability.
Thank you so much, Governor. I really appreciate the comprehensive response, and I was very happy to hear about the RAS program. If anyone is interested in finding out about this further, the digital financial services page of the State Bank of Pakistan gives a very comprehensive overview as well, which is very impressive to see. On another note, from the research that we've done, we see that the State Bank of Pakistan uses a broad range of data sources, including economic indicators like inflation rates, employment figures, and international trade balances, along with sector-specific data and financial system analytics. While this data is obviously essential, we do feel that it might not fully capture all economic dynamics, especially the personal experiences and daily realities of ordinary Pakistanis. In this context, Governor Ahmad, could you elaborate on how the State Bank of Pakistan gathers the right information to best arrive at the policy decision it makes? Additionally, in what ways, if any, does the State Bank of Pakistan balance those statistics with conversations with the people who are going to be affected by those policies?
Yeah, thank you. I think on the data collection and ensuring the quality of data, we have again done a lot of work. And early 90s, it was more, I clearly recall that it was more based on physical returns which were submitted to State Bank. And there was something like 300, close to 300 returns which the banks and other regulated entities were required to submit to State Bank in physical forms. Some on weekly basis, some on daily basis, fortnightly basis, monthly, quarterly, yearly basis. So over a period of time, we made a lot of improvements in that also. Particularly, I think the major project which we implemented was early 2000s, I think in 2005, when we implemented a data warehouse project. And under the data warehouse, we transformed all these physical returns into data variables. This was called ROCA, reporting chart of account, whereby the returns were actually transformed into various variables and at a very granular level. So banks were required to submit information on those variables electronically. So it was no hard copies were required. They will just have to log into our system and will have to provide data on a number of variables electronically. And then we, through the system, started generating output reports for various departments. So I think that was a very transformative project, which streamlined the data. And within the system also, there were a number of validation checks to ensure the quality of that data also, and also to define those variables so that the concerned staff of banks who are responsible for submission of data, if they have any confusion about the definition of the underlying variables, so they can also consult the guidance which we have provided as part of this project. So I think this was a very instrumental project in improving the quality and efficiency and coverage of data. And since then, we have brought number of improvements over a period of time. Another project which we implemented was the credit bureau. Under this project, again, initially it was information was received in hard copies, and we were used to submit to issue credit reports to banks in the form of hard copies. But over a period of time, we have automated this through the telephonic lines. So data was received through telephonic submissions, and then it was internet-based, web-based. And ultimately, we improved the outreach of this project. And we, instead of just connecting with the head office, we connected with all the 17,000 plus branches of the banks. So in the current form, any branch in a remote place in Pakistan, they can log into the credit bureau and they can access credit report on any individual, any citizen of Pakistan, whether they have accessed any financial services through banks or not. So if they have not accessed any financial services, they will get a clean nil report. But if they have availed any financial services from credit services from any bank or any non-bank financial institutions. So they will have information on that individual about the total indebtedness of the person from the banking as well as non-banking system, and amount of overdues, and for how long the amount is overdue and did not paid. So this information is very useful for banks in taking their credit decisions. So I think that data is a huge amount of data which is now available, and it's a individual borrower wise data, and it is very helpful for customers in credit for banks in conducting the credit appraisal of individual borrowers. So similar, there are other data related projects. So I will say that over a period of time that we have focused on automation of data first of all, and secondly we have focused on coverage and improving quality of data, and also the efficiency and timeline within which the banks are required to submit data. And also we focused on the part of banks also, so that they can have their own systems automated, whereby they should be able to compile data electronically on their end and then submit it to the state bank also electronically. So I think this entire process has brought in efficiency, improved quality of data, and also improved coverage of data. And it has also lessened the burden on the part of central bank also, because previously when we were receiving the physical returns, or we were receiving electronic data directly in various departments, so we have to do additional work in order to transform that data into the form and the output reports which were useful for our staff. Now, since this is a centralized database and we have automated it, so now we have just defined the output formats, and through the system we get, various departments get the information in the form which is meeting their requirements and which is useful for them, and they can also make changes electronically, so that if they want to have a data in different forms, so they can do that. So I think this is an area where we have brought in a lot of improvement over a period of time.
Thank you, Governor. I had a final question about interest rates, but before that, I very quickly just wanted to know if the State Bank of Pakistan is using or plans to use artificial intelligence in their models.
Yeah, I think we have a digital financial services group. We call it Digital Financial Services Group, which is, focusing on oversight and efficiency of our payment systems. And within that, we also have a sandbox through which we continue to have various projects on automation and and also on bringing in the efficiency in payment system and in increasing digitalization. So within that group, we are they are also working on use of artificial intelligence for various purposes. And one of the purposes is that how we can use the artificial intelligence in reducing the financial sector frauds, banking sector frauds, because as you know, due to the increased use of digital modes, there is also increased risk of cybersecurity, and people are deprived of their hard-earned money through various modes by the fraudulence. So this department is now focusing on how we can use the artificial intelligence and gather information on the pattern of frauds, and use that intelligence information to revisit our own policies, and also to provide guidance to banks, so that we can minimize the fraud incidents. And also our monetary policy and research departments are also working on a project whereby they want to use artificial intelligence and collect, for instance, the information intelligence about the price variance behavior of individuals, and how they perceive various policies of the state bank, so that we can anchor their expectations with regard to the the price stability and increasing level of inflation and bring it down. So there are various usages of this. It's a very at a very initial stage, I will say, but there are 2-3 areas where our teams are working to benefit from the artificial intelligence.
Right, thank you. Well, finally, Governor, I personally have a keen interest in the political economy of countries. So when I knew the PSA coalition was hosting the governor of the state bank next, I knew I wanted to ask a question about the difficulty of achieving monetary policy objectives of price stability when fiscal policymakers take action that causes inflation. So while you mentioned the new rate for the new month to be 17.3%, which seems to be breaking news, I wanted your insight on why this rate has been so tough to bring down, even with ultra high rates. And finally, how far do you consider yourself and the state bank responsible for this high inflation? And how much do you hold present and previous governments responsible for it?
I think it's a shared responsibility. First of all, I mean, there were certain actions to be taken by the central bank, which we delayed. And similarly, certain actions were to be taken by the government, and which if could have been taken timely, it would have impacted the price levels. But there were certain factors which were, I will say, beyond control of both state bank and the government, and which were, for instance, global developments, Ukraine war, increased oil prices. Similarly, floods in the country. So, and due to that disruption in the supply chain and decreased agri output and its impact on food supplies. So these are the factors which obviously were beyond control. But there were certain areas where we should have focused from the central bank side, and the government should have focused. From the government side, I think high budget deficit, as we know, has been an area of concern, and that's because of low revenue collection. As you may know, that our tax to GDP ratio is less than 10%, direct tax to GDP ratio less than 10%, which is quite low as compared to many other regional countries even. So we have to focus on increasing the tax to GDP ratio. We have to find new avenues for tax collection, have to streamline our collection processes so that there are no leakages on the revenue collection side. And similarly, we have to focus on expenditure side also, whereby we have to curtail the unnecessary expenditure. So these are the areas where government have to focus in the past as well as currently. You can see for the last year or so, the government has taken a number of steps to improve revenues as well as to control expenditure. And this is also reflected in the current level of primary deficit, which has from deficit it has converted into surplus. And also the overall budget deficit has also come down. It is still high, but it's better than what we have in the past. And then on the state bank side, we have obviously, in addition to the monetary policy, we have other roles also, and that is on the regulation and supervision of banks, for instance, on strengthening our payment systems. So on the policy side, we have taken a number of measures, but one argument is that if we have tightened at an early stage, then maybe the inflation would have been relatively on low side. But we have already done the tightening process, and as a result of that, with certain time lag, now the impact is visible on inflation, and it has started coming down. Obviously, there are pros and cons of taking every policy measure. And we have in the process have to see what its impact will be on the public and on the businesses also. So sometimes in order to provide relief to public and businesses, we revisit the timings, and sometimes the actions are delayed. But obviously, Those are the necessary policy measures and need to be taken ultimately if we want to have improved macroeconomic situation. And this is what we have done. Although some of these measures and policy actions are very unpopular, but we have taken in order to ensure the financial stability as well as economic stability in the country. And this has started yielding results now.
Thank you so much, Governor. As we wrap up our main discussion, we will now open the floor for questions from our audience. This is a great opportunity to engage with Governor Ahmad directly on topics of economic resilience, policy priorities, and current global economic trends. Please submit your questions through the webinar chat if you haven't already, and we'll address as many as we can. Seeing as we already have two of similar themes, Governor, I'll proceed to asking you those. Does the State Bank of Pakistan have any current initiatives in place or plan to have any initiatives in place that will attract young professionals from abroad to return back to Pakistan, specifically within the financial sector?
Yeah. So there are a number of areas where banks have been attracting, and I will not go into details of banks, but I know various banks, they attract young talent, and they have good induction programs also. But from State Bank side, I will say that there are 2-3 streams which we regularly through which we regularly induct young officers. One is our flagship SBOT scheme, State Bank Officers Training Scheme. And this is a very structured training and induction and training program, whereby we induct young officers, fresh postgraduates, and we provide them 6 months classroom kind of training in our training institute in Islamabad. It's a residential 6 months training. And once they complete that training, then we have short attachments with banks and other institutions to give them some exposure practical side. And also we have short attachment in various departments of the State Bank. And after that, it's close to 1-year program, training program, both classroom as well as practical training. Then we post them in various departments of the State Bank. So this is a very comprehensive training program, I say, and I will say. And if you undergo this training program, you will find it very useful because of the reason that we don't have much of our own faculty. In fact, we draft faculty for conducting this training program from various from various banks, from non-bank financial institutions, from capital market, from accounting firms. So they are the practitioners who conduct this training program. And then after that, attachment with banks and other institutions provide hands-on opportunity for hands-on experience also. And after that, then State Bank, they can join various departments of State Bank. So this is one program. Then we have economic analysts program. We are, I think, currently also under the process of recruiting economists also under this program. Again, this is a both classroom and will be followed by classroom and practical training, and then they will be posted. And then we have another program for IT graduates. So these are 3 regular inductions which we have from the State Bank side. And then we also have mid-career kind of inductions also, but those are more irregular, I will say. It depends on those are the vacancy-based inductions for specific department and for specific purposes and roles. But these 3 induction programs on SBP training, which is a generalized training scheme, and based on which we post inductees to various departments, and then economic analysts and IT graduates is a very specialized inductions for the respective departments. And one good thing is that we provide a lot of training opportunities once the officers are inducted. On-job trainings, as well as trainings with various central banks and other outside institutions. And also we have very good study program also, I will say, for higher studies. I don't know if you know it or not. Last year, we revised our foreign study policy also. So under this policy, if any of the officers can get admission in any of the top 25 universities, then he is provided leave with pay, and also full tuition and other expenditures for the higher study are borne by State Bank. And this is for PhD level study. So it's a 6-year study program for PhD. Only thing you have to do is that once you are in State Bank, you have to get admission in any of the top 25 universities. And once you complete your PhD and you come back, there is a expedited, accelerated promotion process also. You will be reappointed as a senior joint director wherever you were at the time of your departure. So you will be elevated to a mid-level position based on your PhD. And only requirement is that you have to serve the State Bank for 5 years. So after that, you can leave State Bank if you want to. So this is a very, I will say, attractive higher study program, and which will provide the concerned officers an opportunity for rising within the State Bank. And after serving 5 years, if they want to serve anywhere else, so that's open. If you are unable to get admission in top 25 universities, so there is another program that if you get admission in any of the top 100 universities, then you are provided leave with pay, but you have to bear the expenses of the study. So that's another program. So we do focus very much on the higher studies of our officers, and provide them also the opportunities for career progression also. So it's I will say, a very attractive organization, and you can opt to join once you complete your studies.
Thank you, Governor. I was feeling bad for someone who would get admitted into a 26th ranked university, but there's a 100 ranking as well, so that's good for them. It's a good initiative, I think. Now moving on to our next question. Ryan Ahmed from HPHS asks, what strategies do you believe are crucial for ensuring financial stability and inclusive growth in Pakistan, considering the country's diverse socio-economic landscape and global economic trends?
So I briefly mentioned earlier also that we have focused a lot on promoting financial inclusion. I will just mention two strategies, and details you can find on our website. So one, we have a financial inclusion strategy which we prepared a few years back, and we are in the process of updating this strategy, which was a 5-year strategy, whereby we wanted to promote financial inclusion through not just for the overall financial inclusion, but also through focusing on the on women also, whereby we can bring more and more women to the formal financial services. And the reason for that is that there is a huge gender gap, because overall we have close to 60% of our population, adult population, access to the formal financial services. But when we look at the women, only 43% of the total women, adult women, have access to financial services. So there is a huge gap. So that's the reason we particularly we came out with another strategy, which is the we call it banking on equality. So banking on equality is a strategy whereby we want to bridge this gender gap in access to financial services. In addition, we have streamlined our own regulatory requirements, whereby we have tried to simplify the account opening processes and also try to simplify the other regulatory requirements so that the people can have increased access to the financial services. And we are also coordinating with banks, whereby we have asked them to streamline their own processes and simplify their processes so that the customers can have easy access to the financial services. So there is a lot of focus on financial inclusion from both from central bank as well as from the banks also. Obviously, we are still lagging behind when we compare with many other countries. But if you look at the last 4 or 5 years, you will see that there is significant improvement already. And we have under our strategic plan, which is the State Bank Strategic Plan 2020, we call it VN SBP VN 2028, which we issued last year. So we want to increase financial inclusion level from current 60% to 75% by 2028. So it's again, in order to do that, we have various initiatives planned for the next 4 or 5 years. And once we complete this process, we are hoping that financial inclusion level in Pakistan will improve from 60% to 75%. And within that, we are also focusing on further bridging the gap between the gender gap, so that more women can also be having access to financial services.
That is really nice to hear, Governor. I understand that we are a few minutes over, but before formally closing, I just wanted to ask, is there any advice or message that you'd like to give the youth of Pakistan, specifically those that are studying abroad? Any wisdom that you'd like to send our way?
I think based on my own experience, I will say that first of all, you should be having a lot of hard work because of the reason that there is no substitute for hard work. There are no shortcut, I will say. You will have to continue to strive to increase your knowledge base. And for that, I think in addition to your classroom and other work which you do in the university, you will also have to check for instance, the website of various central banks. If you are in the area of economic policy or financial side, you are doing MBA or some other similar related subjects. So you look at the websites of regulatory bodies and central banks, you will find a lot of material on that, and it will provide you an opportunity to broaden your knowledge base. And it's very easy nowadays. Unfortunately, this luxury was not available when we were doing our masters. So now the information is readily available, and there are multiple channels through which you can access that information. So this is one. But obviously, as I said, for that you have to have to do more work. In addition to your normal studies, you have to focus on acquiring additional knowledge. And also, I will say, in addition to the courses which you are taking, also focus on, once you define your area of focus, for instance, if you want to join financial services, or you want to join IT services, or you want to join central bank on the economic policy or monetary policy side. So once you decide that, then also look at other relevant courses. And those courses may not necessarily be offered by your university. For instance, if you want to join financial services, look at CFA, for instance, look at CPA or similar other courses, which are also practical oriented, I will say. And I keep on advising my own son also on that. Although I have noted that young students just focus mainly on their own university studies, but I think it will benefit you ultimately. And I have personally done that. After doing my MBA, I did my banking diploma to learn about the banking subject, and then I did corporate secretaries exams, and I did cost and management accountancy. So this was all done while I was on job for the initial 4 or 5 years. But at that time, it becomes difficult to do it along with the job. So it's better in the university, since you are focusing on studies. So in addition to your own normal courses, if you find time, also focus on additional relevant courses, the courses in the area where you want to focus on.
Right. Thank you so much for the valuable insight. I assure you that we will be taking it home with us and hopefully be implementing it as well. It is incredibly heartwarming to see not just the deep vision that you have for the State Bank of Pakistan in the upcoming years, but also how well versed you are with each and every policy on different levels. We asked you a diverse set of questions, and you, mashallah, answered it with such grace and such depth. We are truly thankful for your presence. Of course, I'd also like to give a shout out to Ezaz, my co-moderator, and Arif, the president, without which we wouldn't have PSAC today. Thank you so much to our audience for joining in. This platform is what it is because of their support. We were in conversation with the Governor of State Bank of Pakistan, and we went through a range of topics, all the way from what the State Bank does through to what State Bank's vision is for Pakistan in the upcoming years. We do have a lot of amazing guests lined up in the future too, so please do not forget to subscribe to our Instagram and YouTube channels to browse through past videos and stay in the loop for future events and podcasts. Until next time, thank you so much for joining. Take care. Allah Hafiz.
Yeah, and thank